The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a solid up day in the grain and oilseed markets on the day, Thursday. A little pressure in the cattle trade, though, as we examine these markets and keep an eye on entering into the holiday malaise type of trade, as we like to call it. Let's get a rundown and get perspective of what's going on in the markets. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you. It's been a couple of weeks with the holidays and everything. Glad to have you back on the show with us today.
Oh, well, thank you, Jess, and glad to be back. And good, interesting day today. Nice to see some green and some nice technical signals. That new crop corn for this Days 25 posted a really healthy, bullish key reversal. So at a double bottom. So nice to see that. Nice to see some buying interest beans, as you said, the lean oil. Consolidating, but nice update there. And in particular, nice to celebrate the 10-cent gain in March Chicago wheat. That's been such a kind of a dog lately. So nice to see some good positive activity. The start of it came, I think, in the corn complex when we saw a really nice export sales number today. So encouraging on the weekly export sales. It just makes one think that the USD might have to make some adjustment on Tuesday's report. Now, I know it's through the end of last month, but the export pace has been pretty solid. So I wouldn't be surprised at all, Jesse, if we see a little increase to the export sales on corn, maybe a slight increase on feed usage and get that carry out, narrowing in right around that 1.9 billion, edging downward. And then we focus everything on South America.
Yeah, and especially end of the month into January, we'll really be focusing on that South American weather that's been largely favorable and a non-event, it feels like, the last several weeks. I want to ask you a couple of these chart points. March corn on Thursday looked like it closed, I think, right at the 20-day 435. It feels like that's been our area of resistance maybe on that chart. Talk a little bit more about corn. What do you think about some of the chart moves there?
Yeah, so right on with the idea of that's been the area of resistance, but it's only been area of resistance really the last, let's say, 10 sessions where we just keep bumping up against this. And it is a 20-day moving average because prices have been down. The average is actually sliding downward ever so slightly. But you get through this, and then we got to think back a little bit to, where we're mid-November, 442, and prior to that, early November, 448. So, today goes a long way, and this nice outside day with a reversal, closing back above some other bigger moving averages, which are the 50-day and the 40-day, and also back above the 10-day, and it held the 100-day this morning. So, as you can see, I'm mentioning all these moving averages, and they're fairly packed together because really we've been in a big sideways range since July. And so these moving averages are sort of continuing to consolidate. But so we're kind of at a crossroads here. You look at this corn. I don't think farmers have been like selling hand over fist. Certainly not on dips. They need to sell rallies. They have. We're seeing some basis improvements in areas to do some heavy lifting, getting corn out of farmers' hands. But we're really looking at this big saucer bottom here. And to your point, the focus will be to southern hemisphere crops. And right now, if somebody asked me today, hey, would you buy corn or soybeans based on southern hemisphere weather? I would say no, not today. The forecast looks pretty good. But this is where it starts, early, mid-December. To your point, end December, January, February. These are just the real big key critical months. So as things change, so might the market. But one thing I wanted to point out, it actually looks to me like you've got a pretty wet forecast. And that might be just as detrimental for big soybean acres if you start hearing things of disease or rust show up or white mold or something. So things to think about.
Definitely, definitely. Something I think as well, you mentioned wheat earlier. It's been kind of a dog lately. We're getting all these reports about how terrible the Russian wheat crop is supposedly this week. So I'm wondering if the trades maybe finally perking up to the idea that some of those Black Sea European wheat regions, I mean, the supply might not be as robust as we once thought. I mean, is that some of the catalyst why wheat's moving back higher here at the end of the week?
Well, I'd like to think so. 37% of that Russian wheat crop is considered poor. That's one third, more than one third. Think about that. Okay. So I know it's wheat. Wheat has 9 lives, but when you have that kind of a poor crop going into the fall, and then you're susceptible to kind of, winter concerns and things like that, that's not a great start. Contrast that, we are looking for increases in the Australian crop, maybe 4 to 6 million metric tons. So for those with quick on the math, roughly 250 million bushels more out of that part of the world. But if Russia's crop is 37% poor, and let's just pick a number, let's just say 90 million metric tons, that might be down more towards 75 million metric tons. So the net of it should be starting to surface. And maybe that's what we saw today, that traders are finally saying, wheat's low enough. Let's get value bought. Let's forget about the dollar and all this other stuff. Let's just look at the world supply of wheat, and it's tight if you take Russia out of the picture. So Russia's been that big 800-pound gorilla on the wheat market. So if we can get a start in the wheat market, look at wheat rallies, you get something in corn, right? So
Hmm.
I'm just a kind of a fan of wheat. When wheat starts to move, and I don't want to say one day is a move, but it had a good day today, so did corn. So the world pays attention to wheat.
Very true. Very true. A little more on the soy complex. Again, we saw a good strength in bean oil on Thursday. Kind of reversed that the spreading between meal and oil. I think we saw a little meal strength on Wednesday, selling oil. Now we reversed it Thursday. I mean, you look at just world veg oil values, palm oil, etc. Really, the last several weeks, that has been a very robust talking point, I would say, of the soy complex, Brian.
Sure, and it's been a very volatile market. So there's a couple of things in the bean: expectations of slowing demand, worries about tariffs, worries about if the crop continues to mature, you get into the January window, and China pulls the plug on some of these purchases and can't. All these things are out there, and that's been kind of weighing on beans. Yet beans continue to hold around the $10 area, and the backdrop to that really is world vegetable oils. You kind of hit the nail on the head. And so, sort of let's call it the kingpin. The thing that we look at is Malaysian palm oil prices, and they're right up or against new contract highs. So there's a bit of a pullback here a couple of weeks ago, but they're back on the offensive. Certainly something to be recognized, something to think about. We look at soybean oil. I think the kind of the hangover effect of what a few years ago, good news and all the soybean oil and sustainable aviation fuel. Now there's a
Mhm.
big question mark, right? So, my fingers are crossed that maybe Congress or the new administration picks this up and makes it happen. But it's not. It's not. So what I'm giving you is these countering things right now. So one, good weather in South America. Two, high vegetable oils. Three, the market consolidating, but it needs to make a move, I think, pretty soon. Otherwise, the focus will shift solely on South America if the weather's sufficient.
Very true. Very true. I think overall in the grains and oilseeds too, I should ask you this question. Holiday time frame is always one where the markets can get a little choppy or they can get volatile with low volume. But I'd say this is a time for folks to definitely reassess their risk management plan when it comes to grains right now, right, Brian?
We've been talking, what, 10, 11, whatever, 12, 8 minutes, 9 minutes, and we've talked all about outlook, right, and what's happening, but not about risk management, not about strategy. And that's because we're humans, and so we like to look at, well, the whys behind what's happening in the market, what could happen. What is going to happen is anybody's guess, right? So we don't know for sure. We have our hunches, we have our good educated guesses, but the strategic planning for different scenarios is something that I would really elevate on the top end of a to-do list as a farmer. Right now, you got a bean market that's right at a pivot point. This $10 is pivot point. You throw some weather at the market, and we're at 11 pretty quick. If the weather's, I should say, throw adverse weather. If the weather is good, you've got a technical picture right now that really points closer to $9, and that's just the reality of big global inventories. and the world's ability to kind of slow down its buying and buy as needed as long as it looks like a South American crop is coming through. So really, from a strategic standpoint, think about that. Corn, not quite as urgent, so wouldn't get over our skis too far on that yet. But I would suggest corn producers continue to trickle some corn into the pipeline. Um, there's no carry in the market. There's a few pennies between this December and next December. March has really tightened that gap on, or December has tightened the gap on March corn. So the market's telling you want your corn sooner than later, but it's not rewarding you a lot, but it's still telling you that, which gives some thought to how you want to manage that.
We're talking today with Brian Doherty, Senior Market Advisor with Total Farm Marketing. Let's go over to the protein sector, Brian. Cattle, man, it's been an interesting week, up and down. We were lower Monday, we gained it back Tuesday, then Wednesday and Thursday, down days again. I mean, what are you watching in this cattle trade right now, Brian? What stands out to you?
What stands out this week so far is we've got a flip in the choice cutout values. So they had some good punch into end of last week and some what appeared to be good after Thanksgiving, what of course was holiday kind of type buying. And then the choice cuts yesterday ended $2.50 lower. Selects firmed up 237, but that spread between choice select, I think, got too wide. So what it probably told me is that the retail market was securing inventories for the holiday, the Christmas window, New Year's, and it looks the way the market's trading now, it looks to me like that may be drying up. And I think the futures market foretold us or pretended that today, the way that it tipped over. So one, I'm looking at cutout values. Two, I'm looking at the technical picture on cattle. Again, just get into this 190-ish area, in particular that April contract or Feb, and it just runs out of gas. And I think the concern is, and it should be a concern, is that the consumer is spending money in a lot of areas. You got year end, you got property taxes due, you've got Christmas bills due, you got credit cards coming. It's going to cost more to heat your house just because it's getting colder. We got a taste of winter this week in the Midwest. I worry about the demand side, not the supply, but I worry about the demand side.
Hogs has been interesting to watch, kind of a mixed bag Thursday, but that market has been trending higher. Summer months are still holding above 100 here. I mean, hog trade, that's just been grinding its way and churning higher and higher, it feels like here as of late, Brian.
What a fabulous summer month contracts. They had just had this outstanding, just straight up trend, almost one correction along the way. But now getting again to historically lofty levels. You get these hogs above much above 100, you've really got to have a compelling argument. And perhaps there's one out there, but really corn's been cheap for a couple years now. It's been in a downtrend for 2.5 years or more. So I think it's going to be hard pressed to say, well, they'll grow the herd now because corn's cheap. Corn's been cheap. It's still cheap. So this rally here to me is a really, really outstanding opportunity. But what it also is just a huge, 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 huge reflection of the way that the managed money has bought hogs. So we track the last 5 years of managed money flow, and you get a line on a chart for each year, and then you take a look here in the last couple of 3 months in hogs, and it went from negative to just straight up. So I think the money flow anticipated that beef supplies were going to be tight. They went and bought these hogs, anticipating that there'd be more demand for hog products. That's what we're seeing. Now can the market advance much from here? I would probably say not. I think the move is mostly behind the market, if not already behind the market. No strong topping activity, but we did get crossover in stochastics yesterday, and we did get a hook reversal down on the hog futures here on Thursday and Tuesday. So I would be hedging hogs.
How about the dairy market? Let's wrap up there. Anything big you're watching as we get into the month of December?
Yeah, what I'm watching is not anything big. That's the problem. It's a market that had this nice run into the mid 20s. I as well as probably every dairy producer was just disappointed it didn't kind of stick around very long, and it corrected back. No, it's not a train wreck. but we're just not seeing the activity. We're not seeing the, multiple days of cash prices higher. I looked today, yesterday, it's some nice gains in the cash market, and today it was flat or down. So no follow through. And then I think the thing you want to really look at in that cash market is whey has actually been really impressive. It's hit new highs, but butter near new lows, and for the year, and then the cheese market rebounding some here this last week. But boy, these blocks and barrels, they're still under 17. And if you take the old adage and add those two together, divided by 2 gives you an average, and multiply it by 10, that's a rough idea where this futures market should be. And the futures market on the February contract, the January contract, over $19. So probably running premium to what the cash is, and that I think might be a fair price, anticipating some rebound in the cash cheese, Jesse. But boy, it's still a premium, and I'm staying defensive of the dairy market right now.
Brian, always appreciate the thoughts. And I know if folks want to reach out to you, talk about some of the risk management strategies across the ag sector and more there at Total Farm Marketing, a few different ways to get in touch with you. How can they reach you, sir?
Well, first would be a phone call, 800-334-9779. Second's email, Brian with a Y at totalfarmmarketing.com. Or take a look at our website. We got a great website. Again, lots of resources there. So we've been around a long time, so I think we got a little bit for everybody. And just take some time, give us a call if you want.
Absolutely. TotalFarmMarketing.com for more. Brian Doherty, always a pleasure, sir. Have a great weekend. We will talk to you next week.
Jesse, thank you very much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.